Honored to have you here. Thank you so much. Honored to have you at TechSparks. It was a great delight for us when we heard from your office that you're going to be coming. So thank you for
Thank you
coming
for
all
having
the
me.
way
This
from
is
London.
quite an event, super well attended. It's my first time, hopefully not the last. Thank you for having me today.
We hope it's not the last. So Manish, tell us, we keep on reading and we've read a lot about SoftBank and its investment thesis. But before we dive into the conversation, tell us, what's the thesis behind the investments that you make?
Sure. So look, the fund was set up in May of 2017. And what's a big picture thesis, right? So if you look at what's happened to the world over the last few years, there's been a lot of data that is today being able to get captured, right? Data always kind of existed, but you couldn't really capture it. You couldn't capture it because there wasn't enough computing power, there wasn't cheap computing power, machine learning wasn't advanced enough, artificial intelligence hadn't yet come into play. So our thesis was, as data sort of usage, consumption increases, and the fact that you can capture that data because of increased computing power and cheap computing power, once you have the data, you cleanse it, you stratify it, you put it in a data lake, and then you use machine learning and AI to extract value from that data. And our view was that as the world evolves and data sort of generation, capture, and usage increases, fundamentally, a lot of businesses and a lot of industries would get transformed with that, right? And they would get transformed in a way that would help solve sort of real pain points, whether those are for consumers or for small businesses or for large businesses. So that was our thesis, that we would look for companies that are using data in a smart, intelligent way to fundamentally offer or fundamentally change certain businesses, certain industries to make the lives of consumers and businesses better and easier. That's the big broad thesis. And the other thing to add is that the Vision Fund itself, we are a late stage growth fund, so we don't typically do early stage deals, we would do late stage growth deals. We have capital and we would want to deploy that capital to accelerate the rate of growth of our investee companies.
If you could take us through some of the investments that you've done in India.
Yeah.
And then today we had Vijay in the morning, a company, his company where you've invested. How do you take those decisions and how you've taken the decision of investing in some of the companies and growth, typically, what does growth mean, like growth stage company?
Sure. So I think when we look at investing in a business or a company, right? So the first thing you have to see is that how big is that addressable market? So what is the target addressable market in that space? That's almost step one. And these are not sequential steps necessary, and I'm not listing them in order of importance, but I'll just tell you the 2 or 3 things we look for. That's one. B, we look for the fact that does the company actually have a product or a service that is genuinely going to make a difference to a consumer's life or a business's ease of doing business. And the third thing, which is super important as well, is our belief and faith in the entrepreneur. Does the entrepreneur have the energy, the vision, the passion to make this into a real success? And does that, in terms of time scales, does that match what our vision is? So we're constantly looking for companies that solve fundamental pain points, that are playing in markets that are big markets and can grow even further, both within India and outside of India. And the third thing, of course, is the quality, the nature, the enthusiasm, the courage, the energy of the entrepreneur. That is super important. So that's how we broadly look when we're looking at investing decisions. And when I say late stage growth, what I mean is that we're looking for businesses or companies that have established product market fit, that are already doing well in their chosen space, and by our capital, they can increase the rate of growth, they can expand into new geographies, they can expand into adjacent markets.
You've said, and I'm quoting you, is that we are in no hurry to list the companies that SoftBank has invested in India. And then there's nothing on immediate horizon in terms of IPOs. IPOs are an important one-time decision for the company, so we will take them public when the time is right. If you could tell us, especially in context of India where we've not seen IPOs.
Yeah, so look, exactly what I said, that when do you take a company public? First of all, that's a company decision. It's an important decision in the life cycle of a company. There is enough private capital available in the world for companies to grow to a certain size and scale without needing to access public markets. When a company decides to access public markets, important one-time decision, companies to take it. We will obviously discuss it, debate it, be supportive of the company management, founders who have brought the business to that place. And I think the Indian capital markets haven't seen very many listings of new age companies as of now, but Indian capital markets are also getting deeper. They are getting more liquid. They are developing. And I don't think you'll have to wait super long to see some of these companies list in India. And I think that it's just a natural evolution of the ecosystem, right?
Manish, you have access to the board seats of some of the companies that most of us here in India read and look up to. You know, these are big names and unicorns. Tell us, you know, what happens in these companies in terms of scale? Because one of the requirements to get an investor like you is to have a very rapid scale and numbers growing very exponentially. How does that happen, and how are you? And you know, I'm asking this question more in context to Indian market as a consumption economy, the paying power. What are you seeing in respect to these companies on whose boards you're sitting?
So look, I think generally speaking, right, if you look at the Indian market as a whole, India is not a demand-constrained economy. There is no shortage of demand in India at the right price point. It is a very value-conscious economy, and if you have the right product at the right price point, there is no shortage of demand. What India is constrained by, to my mind, is it's got a constraint on the supply side. So supply has to be created, and a lot of the supply that does exist is fragmented supply, which is where the value of some of these platforms kick in, right? If you don't have a constraint on the demand side, as long as you're selling a product at the right price point, there's fragmented supply, and if you can then create platforms that sit in the middle, which can consolidate the supply, consolidate what supply has to offer at different price points and offer that to the consumer, those platforms we think will be super successful, are successful now, and will be even more successful in the future. And in terms to your question, Shraddha, on scaling, right? Scaling is, I think, how do you scale a company quickly in real time? To a large extent depends on management, the founder of the company, who he's got running different verticals, how they can hire the best people, how can they recruit talent constantly. Because if you want to scale something fast, the biggest challenge and the biggest important decision that management has to take, who to hire, how do you hire the right folks at different levels within the organization such that your business grows, and you hire different folks, different levels, while at the same time preserving the culture of the company. I think that's, you know, if you look at what Paytm has done in India, or Delhivery, or Ola, or any of our portfolio investments in India, right? They've been able to scale very rapidly, and a large part of that credit goes to the management of these companies that are able to hire and recruit and retain talent very well.
Yeah. You know, so recently I had interviewed Nandan Nilekani, and he said something very interesting. He said, and I asked him about unicorns and the valuations that we are seeing in the entrepreneurship space, and he said that I would rather any day be a unicorn in revenue rather than a unicorn based on valuation. Having said that, he also agreed that, you know, to build large business, you have to spend, and you have to, you know, burn cash, if I may say so. How do you look at this? You know, does scale, that kind of scale, require immense amount of cash burning?
Not necessarily, right? By definition, to get to scale could mean multiple things, right? You can get to scale by deploying more capital. Clearly, it's one of the things you can do to get scale. But there are other levers as well that you can push to get to scale, right? And you mentioned that valuations. Look, when you look at valuation of a company, that's one metric on which to judge a company, right? A valuation of a company is what somebody else is willing to pay for that asset. It's one metric to judge a company. You judge companies by different metrics. You judge them by growth rates, by revenue, by contribution margin, by EBITDA, by free cash flow. You judge a company through different metrics. I think it is wrong to think of a company just by virtue of the fact that they have a certain valuation, and that valuation basically comes from the fact that somebody else thought that asset is worth that much. It's only one way to look at a company and try and get a sense of the, you know, sense of the sort of quality of the company, right? And we tend to look at a whole host of metrics. Scaling does require capital, there's no two ways about it, but that doesn't mean, and again, investments and spending capital and spending money, if it's done in a disciplined manner, in the right manner, where you're seeing the return on that investment, where you're seeing a return and you're seeing a path of return on that investment, where you're seeing a return on how that capital is getting consumed, yes, one should use it to scale. but it's not the only thing you use to scale.
Yeah. So Manish, again, talking about these companies you've invested in India, all these large companies, just so that we can understand and all of us can understand who are, maybe in our early stage in terms of the capital that we've raised or looking at raising, is what have you seen that these companies have done right to raise that kind of capital or get SoftBank on to invest in them?
So like I said, right, for us, quality of entrepreneur, target addressable market, product market fit, growth rates, and what they've done is that they have shown that what they're doing, there's a market for it, there's a need for it, there's a fundamental difference that they're making to people that are using their product or service, right? So I think that's the one thing that we really spend time on, is that what you've built or what you are building, does it have a real market, big enough market, and also what your competitive moat is. Because if you go back to what I originally said, that look, our thesis is data generation, data capture, data usage will drive a lot of value going forward. So we want to see that what have you been able to build as a competitive moat using technology? Can you be a platform type business? Are you connecting disaggregated and fragmented supply to the demand side? Those are the sorts of questions. Is there a network effect that the more people that are on your platform, the more people that use it, the more indispensable you become, the harder it becomes for someone else to break into that market? Those are the sorts of things we spend a lot of time looking at, getting deep into and understanding.
So SoftBank recently said that it will invest 2 to 4 billion in India over the next 2 years. What are some of the companies that you're looking at?
No, I can't comment on which companies we're looking at, but suffice to say that we are very positive on the outlook for India. We have invested in some phenomenal companies here. We continue to see very exciting opportunities in India. We are amazed and we are excited with the quality of the entrepreneurs that we meet in India. And we are excited about helping some of these entrepreneurs, working with some of these companies to take them global. So in fact, a few of our portfolio companies have already ventured outside of India. Oyo's there, Ola's outside, Paytm's in Japan. And these companies have done a phenomenal job expanding outside of India. So I can't tell you which companies we're looking at, but obviously we are super engaged. We are very positive about the prospects for Indian companies, both domestically and internationally.
But the question I have is that these companies that you mentioned, Paytm, Oyo, and then they're expanding now and going outside, is there something very unique, Indian-ness, that they bring and which you are seeing with these companies, which you are taking to your portfolio companies across the world?
Yeah, so here's my view, right? If you go back 5, 7 years, not that long ago, go back maybe 10 years, right? A lot of the business models that you saw were developed, and this is my view, that business models were developed in the West, and then they got exported to the East, right? It was business model being developed in the US, UK, came to the East. Now, and we're seeing this almost every day, if you look at what business models companies in India, China, Brazil, other emerging markets, Southeast Asia are coming up with, a lot of those business models, once they're proven successful in these markets and these economies, are now being exported to the West. So I would say two things to this point. One is that India, for example, is not necessarily, it's a tough place, it's a competitive market, right? There is no shortage of capital in India, of people that want to deploy capital into the country. There is no shortage of super smart young talent in India. It's an open playing field. If you start something up, you'll have local competition that will spring up very quickly. You'll have international competition that will spring up very quickly. It's an open economy. So when we find entrepreneurs that have managed to make a success of their business in India and have found a local solution, we think that local solution very often can be turned into a global business. So, and the Indianness that these entrepreneurs bring is the ability to, I think, be competitive, be focused, be aggressive, and a lot of things that when they expand internationally, it serves them in very good stead. And that really excites us.
Okay, so before I open it to the audience, a question to you. You are in if I may say so, I always compare like in the startup world, for entrepreneurs, investors are like such a big deal. And you are like such a big deal because, of course, you are SoftBank and you are the managing director in a huge, large global fund. Tell me, what does it mean to be in your role? And then there's so many companies which you accept and say yes to, but there's so many amazing companies which I know you have also said no to. How does this process work?
So I think the first thing you have to remember is that we manage money on behalf of our LPs. So the first thing that we have is a fiduciary responsibility to our LPs whose money we manage, who have entrusted us with managing their money, right? And so with it comes a certain amount of, and investing is part science, part art. We have some experience. We've got Masa at the top of the firm who has a phenomenal vision in terms of where the world is headed. He thinks decades ahead. So we've got the expertise of people within the firm, Masa and others, Rajiv, who's the CEO of the Vision Fund, who have very strong views and great opinions, and they've been very good at seeing which way the trend is going. So we think that our job is to try and find good companies. We will not get everything right. We will obviously make mistakes. Investing is partly making mistakes as well. But what drives us is to be able to find good businesses, solving pain points for consumers and other businesses, picking the right entrepreneurs, picking the right markets, and then backing those entrepreneurs not just with capital, but with access to the entire SoftBank Group ecosystem to help them expand, help them grow, both within India, from an Indian context, and internationally. So look, it's a great position to be in. I get to meet some super smart people almost every day. Every day when I go back home, I've learned something new from a different entrepreneur that I met, intellectually super stimulating. But our fundamental role at the firm is to try and exercise a fiduciary responsibility, invest with sort of intelligence, invest with some amount of caution, and produce a return for the LPs while helping companies really scale, really grow, and solve pain points for consumers.
You know, it was supposed to be my last question, but from your answer, I have one more question. You said with people like Masa and then Rajiv, they know where the world is and where the technology and the world is moving. Can you give us a tip or tell us what are some of the areas or sectors that you think are exciting and where you think the world is moving?
Look, every sector is exciting, but so when I think about this, right, so far with machine learning data, I think two sectors have fundamentally gotten transformed so far. Everything else is in early stages as yet and will get transformed over the years to come. I think one sector that has been transformed is retail. I think a lot of what was considered retail with the rise of e-commerce, the retail business, the retail industry is fundamentally undergone a shift, right? The other sector I think that has undergone a shift as well is advertising, right? A lot of the ad dollars that were spent on traditional media is now being spent on digital platforms. How people consume content, how people consume media has also changed. Every other sector, even now, it's early days, and we think all of these sectors, whether you can take construction, you can take mobility, you can take any sector. This is just the early innings of how these sectors will change, and we are excited to play a part in that.
Great. Thank you so much, Munish.